Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So we came in this morning not knowing how we'll start a new year, except for the futures are up 14 to 15 handles after the last multi-day pullback we had at the end of 2016. So strategy A, B, and C. Do we gap up and hold and continue to the upside with a gap and go, where it makes it where you have to get in pretty quickly in the first, just say 15 to 30 minutes, and you have a level to trade against? Or do we gap up and then fade and go red and they sold the strength? Or do we get a little bit of what happened today where they gapped up, then basically took out the 30 to 60 minute low, and some sectors went red like the small caps, and it was hard to trust because you had divergences everywhere. And then at the end of the day, the cute buyers came in with the imbalance because there's still some new money that needed to go to work. So all in all, I think you have to still be a little neutral to positive, where I feel like, a little bit earlier in the day, maybe a little neutral to negative. But that's the way you got to do it when you trade real time. So anyway, how do you navigate? Look at the chart here. This is the daily chart of the SPX. So, let's just do a quick little, push or draw a line here. That's your descending trend line after your pre-election sell-off, and your also it wasn't even a post-election yet. This was your bounce back, and then this was your election day results, and then it held and then went. So now the question was, can we take out this descending trend line, kind of like what we had here, but look how long this went for, or not? So for now, I would say we're still in this upper pennant type pattern. It was a little tighter before last week's Wednesday move, but now it just broadens out, and now we got to figure out what's next here. So just so you guys understand my language a little bit, okay, I came in pretty flattish today. So I said I'm going to buy versus a level. Okay, let me show you how I do it. Okay, so this was your basic move. Okay, so right here, when it looked as if we were taking out this bull flag to the upside, I started buying the spiders. Okay, let's go to the spiders versus the SPX. So I figured, okay, let me see if we could buy versus a gap, because if we hold this gap, it's a good level to trade against. So right here, I was long a little, added here, okay, sold a little strength, okay, but then I had a decent amount. So on this first pullback, I'm like, all right, we're testing this prior high, let me buy a little bit more. And then I figured if we break this level, which was the morning gap, okay, below 224.71, which is why I tweeted it to Redler All Access saying I bought verse, and it was a nice trade to start. I wasn't doing it for a day trade. I tried the position, got stopped out here because who knew, how far we would go down, okay? And I felt pretty good being stopped out here, saying I'm going to wait, see what happens next. Came all the way down to as low as 223.88. So then you had lunchtime, right? All the way through lunch. You had a little bit of a sideways consolidation. So now I tweeted to Redler All Access saying, okay, now that we have more data, this was your first 15 minutes or 60 minutes, I'm a buyer here versus the day's low, which was the morning low, which was here. So I was risking, maybe 40 cents for it to pop back up into the close. So, I had a quick pop, came back, retested it, actually added here. If you're on the VTF, you saw me add to the spiders here. And then I sold some strength, and now I still have some. So here, you have no idea what's going to happen with price discovery. Is it going to go down, continue, and then continue down and fail and be sold? Or, does it come in, go sideways, and pop back up and give you a doji, which is what, we had here. So at this point, I feel as if, well, I'm a little bit more neutral to positive as we let things figure out. Here is your new range. At some point, maybe it breaks above this and you could buy strength. But for right now, continue maybe to buy weakness versus levels. Until we get more clarity after the first few days, if not. Okay, last time it happened here, it took a long time though, if you remember. So anyway, that was the spiders. The small caps gapped up and went red. That was one reason why I was a little cautious also. They came up at the end of the day. Nothing great here, but still I guess you could say that this is intact if you want to look at the small caps. Okay, it was a little weaker today, but intact. The Qs at first got rejected at that price level that we talked about, which was right here. Okay, and then it had a bit of a doji. So at this point, I would say you could be long versus this, and then at some point maybe this takes it out, and that would mean it's acting better. The banks weren't easy. The banks started off strong, had every reason to go, strong numbers, in the morning, and then they just faded. I actually was long in the Goldman Sachs. I got stopped out. At the end of the day, came back up. Doesn't look, looks a little, well, it was a little frustrating considering I thought today would be the day it closes above it. You could be long to 250 plus. Didn't happen, but didn't break down either. Just another day in this friggin' range, and we'll see how long it lasts here. Remember this range that frustrated everyone before going. We'll see if that continues there. So the banks were a bit frustrating, but hung in there. Bank of America, I chose to go with a little bit, but I'm still in a little, and we'll see if we can get through here and show some kind of power. This is your stop to trade against. I also did buy the IBBs. I talked about it, how maybe to get some flows. Nothing special, but IBB did have some relative strength, held in for most of the day, and we'll see what happens here. It took out Friday's low and popped up. It still has a lot of resistance above, but I thought maybe there's some room up to 275. Okay, at this point, still a laggard sector, but perhaps some money rotates here as last year's tax loss selling was done, and we'll see if it could get back to the 200-day or not. This is the real resistance all the way up here. So some decent action in some names like Guild. Okay, some guys bought the stocks. I said I'm just going to go with the ETF just in case. You have a descending trend line here. We'll see if this breaks above that. You have Celgene also. A bit of a bounce, not a crazy bounce, but a bit of a bounce. This actually looks better, technically. Came in here and then came back above and is trying to get back going, so that could show some leadership there. DP, I'll give you a shout out. Congratulations. I know you've been buying this thing since under 10 and made a new high here. We'll see if that continues, but all in all, been good to guys on the VTF. A bigger name stock that people know better. GWPH, I did buy some calls today. I'm going to accumulate some of the Mays because I don't like to sit in bios, but this one at some point intraday, if it takes this out with volume, maybe it wakes up and you could see better action. But again, these are news driven, so I don't want to sit in there just in case it doesn't come out with good news. So I bought the May 120s thinking that if it's good news, it takes out this 140 and goes. It was in my 2017 report. I did buy a little bit of this. I got sucked in like everyone else. Thinking maybe there's, one more day of January effect, if not more. I like to, buy day one, add day two. I only bought day two and I sell day three. We'll see if there's a little bit more there. And all in all, it was not, it was just a lot of divergences. It was hard to have confidence in Google and Netflix when Amazon went red, or Google and Netflix and even Tesla when Amazon went red and Apple was red, and you had Babu wasn't acting well. You had the same kind of divergences. Right now, Amazon still, to me, has a lot to prove. Okay, don't know why it's so weak. Maybe it's setting. I don't know. Not above my pay grade. All I know is it got rejected by the 50-day. Today it was up $10, went lower, and was a better short than a long. We'll see if that continues. Google was a better long than a short. Popped back above the pivot that we talked about. Went back above this 803. So now stays above 803. Maybe at some point it takes this out and gets better. Netflix perked up a little bit. At some point, I know it wasn't ready last week of December, but maybe now it came back up, held the 21-day, and now that there's new flows and more people, back from vacation, maybe it goes. Apple was weaker most of the day, but then it did also give you a bottom tail into the 21-day and turned up, so maybe that is the low for now. So lots of individual type of trades, and in the first few sessions, you need to watch to see if some new relationships develop, if some old ones continue or old ones change, and continue to take trades. And while there's price discovery, be flexible. If you bought the first 30 minutes and got stopped out after an hour of trading, it happens. You had no idea where it was going to go. We could have went red and continued lower, and it could have been a sell this strength, and we could have had a January like we've had. So it is what it is. If you took a shot and on Friday went long and sold the open, that's another different trade. You took the risk. If you used tight stops like I did in the first 30 minutes and got stopped out, hopefully you went back to it, in the midday when you had another point of reference and you made some of your money back, and now you're back involved, and we'll see if there's better price action. So pick and choose where you want to live, and we'll let the first few days work themselves out before we make bigger bets for continuity. And that's about it. Have a great day or a great night, and I'll see you in the morning. Bye-bye.